Warren Buffett's investment strategy. We are unsure of Buffett's actual investment research methodology because a large portion of it is confidential. However, the following are some of the most significant Buffett investing guidelines that you can use to your own investing approach in 9 steps. 1. Look for a margin of safety. Buffett's investment strategy is founded on the idea that a margin of safety should come first. A margin of safety, put simply, is a feature of an investment that helps guard against investors losing money. There is a $2 margin of safety. For instance, if a stock trades for $10 per share, but the company's assets are actually worth $12 per share, the asset's intrinsic value should keep the company's stock price from dropping too much. Always paying less than a company's intrinsic value is Buffett's objective. He claims that the results of a later decade of favorable business growth can be undone by a high purchase price for the stock of an excellent company. 2. Focus on quality. Buffett avoids investing in garbage. He rarely buys failing companies, regardless of how inexpensive they get. It's far better to acquire a wonderful company at a fair price than a fair company at a wonderful price, is one of the best phrases from Warren Buffett that new investors can remember. 3. Don't follow the crowd. Another piece of advice from Buffett that is crucial for beginning investors, particularly in the era of Reddit message boards, is as follows: a stock shouldn't be purchased just because everyone else is. However, you shouldn't constantly try to be the opposite and sell the stocks that everyone else is purchasing. The greatest method to invest is to completely ignore the herd and concentrate on identifying value on your own, like Buffett does. He further adds, temperament, not intelligence, is the most crucial characteristic for an investor. You need a temperament that doesn't enjoy being either with or against the mob very much. 4. Don't fear market crashes and corrections. Although buying low and selling high is the obvious objective of stock investing, human nature often drives us to make the opposite decision. We feel motivated to work toward financial independence when we observe all of our peers as successful business people. It's also in our tendency to sell our shares as soon as a market meltdown occurs to avoid future price declines. Buffett enjoys stock price declines because they present opportunities to purchase at a bargain. This helps to explain why 2022 has been a very active year for Buffett. Would you panic and flee if you were in your favorite store when you saw all of the prices had been reduced by 20%? Obviously not. Buffett welcomes price reductions on his preferred stocks and declares, opportunities are few and far between. Put out the bucket when it starts to rain gold, not the thimble. 5. Approach your investments with a long-term mindset. Warren Buffett once said, if you aren't willing to own a stock for 10 years, don't even think about owning it for 10 minutes. This is one of the most significant statements about investing you can learn from him. He doesn't pick stocks only based on his expectation that they would appreciate in value this week, this month, or even this year. Buffett invests in equities because he intends to hold on to the companies for the long run. Although he still regularly sells equities for a variety of reasons, he approaches the majority of his assets with the intention of holding them for the long term. I set it and forget it investment like an S&P 500 index fund, according to Buffett, is one of the finest investments most people can make if they can't adopt a forever mindset with their equities. 6. Don't be afraid to sell if the scenario changes. The most essential thing to do if you find yourself in a hole is to stop digging, said Warren Buffett when asked about an investment he chose to sell at a loss. While he undoubtedly hopes to own every asset he purchases forever, outlooks do shift. You might be surprised to find that Buffett invested heavily in the mortgage company Freddie Mac a few decades ago. However, a few years ahead of the 2008 financial crisis, he became concerned that the lender's management was beginning to take unwarranted risks with the company's capital and made the decision to sell. Buffett made a wise choice. which was made abundantly evident when the financial crisis struck. 7. Learn the basics of value investing. The greatest value investor in the world is regarded as being Warren Buffett. Value investing prioritizes purchasing investments at low prices compared to their true worth. The basic objective of a value investor is to purchase shares of a firm for less than $100, ideally much less. Value investors look for and invest in businesses whose intrinsic values are significantly higher than the suggested enterprise values reflected in the prices at which the business's stocks are traded. Value investors like Warren Buffett anticipate that the market will eventually realize a company's full value, leading to an increase in the stock price of the business and a profit for the value investor. 8. Understand compounding. Possibly the best illustration of the effectiveness of long-term compounding is Warren Buffett. Buffett benefits from the power of compound interest, dividend reinvestment, and the ability to continuously reinvest operating cash flow produced by Berkshire's businesses. How effective is this? Since Buffett took over in 1964, Berkshire has generated an annualized return of 20.1% on average versus 10.5% for the S&P 500. This might not sound all that remarkable until you consider that over time, this has led to a total gain for shareholders of 3,641,613 as opposed to merely 30,209 for the S&P 500. 9. Research and reflect. Buffett typically works long hours in his Omaha, Nebraska office. Investors are frequently shocked to find that he spends the majority of his time alone, reading, or doing nothing at all. According to one of the quotes from him, "I insist on a lot of time being spent, virtually every day, to just sit and think." The gathering of as much financial knowledge as possible, in Buffett's opinion, is a key factor in his success. He sees knowledge as something that grows with time. Please subscribe for more investing videos.